Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 48th COT report of this year, and as usual we're going to start off with the changes in commercials positions. Our first market is soybean meal with a 16% change in commercials positions. You can see this change on the chart over here. It is definitely one of the largest changes in the past 52 weeks, in the past 1 year. So it's a change signal that we should definitely have our eye on. And if you look at the chart, you can see that technically speaking, we're very close to a resistance level. And so basically, in either ways, we can come to the conclusion that there may be an opportunity downwards. The COT report is definitely supporting that, at least from the COT change perspective. Now, opening the 5-year chart, you can see how extreme this market is, and you can find that commercials and also large speculators are getting closer and closer to their bearish extreme. So if this is going to be it, if that's a relative extreme and prices would fall back down, that may happen. It's hard to tell. One thing's for sure, we can expect this extreme to widen further in the next couple of weeks. One thing's for sure, stress levels are building up on the bearish side, and we should be prepared for lower prices. Palladium is our next market. Similarly to the soybean meal, a 16% change in commercials positions. Again, we're talking about a bearish change signal, a bit larger than average. It's a bit more difficult to see how large this is compared to the past 52 weeks, but I'd say it is pretty significant. And again, prices are high, so we may expect this signal to be an effective one, pushing prices down in the next couple of days. Now, the extreme you may see is still not at its all-time, but getting much closer to it week by week. And you can see that on the 5 years chart back over here in 2014, when we had this largest extreme on this 5 years chart, that was actually the top in price of palladium. So we're not at that level. Prices are higher. So this may continue for many weeks before we reach that extreme level where the bubble bursts basically and stress levels have to come down. Cotton is our next market. We have a 15% change over there in commercials positions. Again, prices are very near there to a close resistance level, and the change size is definitely reasonably large. So we may say that this is a good signal, and possibly acting on it is a viable decision. Opening the 5 years chart, you can see that the extreme is closer to its bearish side. We're talking about a 24-23 report extreme, and there's still a long way. There's more than 50,000 contracts to build up for commercials on the short side, and well, approximately the same for large speculators on the long side. So this rally could continue. But if you have a system and it's telling you a short opportunity is arising, you should know that the report is, I would say, is supporting a bearish move more than a further rally. Now let's jump over to large speculators COT extreme. You can see we have crude oil on top of our list with an all-time extreme, both in commercials and large speculators. Commercials have roughly 600,000 contracts net short. Large speculators, just the opposite, 600,000 contracts net long. So this is an all-time extreme. We've never seen these traders building up such huge positions. So stress levels are sky high. Whether or not this trend can continue, it's of course hard to tell. So if it does, don't be surprised. I've told you many times in the past that all-time extremes can be present in the market for many weeks or even months before the price of that specific market starts reacting to it. So it's just a reminder to be careful. But one thing's for sure, eventually prices will come down. And of course, as they do, traders will decrease this stress level in the market. Swiss franc is our next market with a 284 report extreme in large speculators. Huge extreme in this market. But as you can see, prices have already reacted. So this signal was actually there. If you go back a few weeks and check out my review, I was talking about Swiss franc before, and I was telling you that there's a good opportunity here on the bullish side. So of course, there's nothing against further rallies. So of course, maybe if you want to get back here and you would be waiting for your rebound and getting back in on lower prices, that might not happen. So who knows? But the stress level is still there, which is interesting. So large speculators have increased their net short positions from last week or 2 weeks ago. Sorry, which is interesting. But it's a risky trade because, of course, support level is pretty far away now. Okay, let's move on to have a look at our last market for this review, which is oats. We have a 200 report extreme over there in large speculators, 230 report extreme in commercials. This is a pretty decent bearish extreme. And, well, you could see that bearish extreme actually when prices have already started declining. So maybe similarly to the Swiss franc, as I was just pointing out, would be difficult to get in to this market. So anyhow, it's there, and you can see how prices reacted to bearish extremes in the past, and you can see that pretty well. Price has always back down after we had a bearish extreme that large. Now you can see prices are already decreasing, so again, it could be a bit difficult entering this market now. So that is going to be all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.